Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday and from the United States, we will be waiting for the following economic headers to be released. The business industrial trends for month of September with low importance, and that's all for the economic calendar. For that, we will be watching for the US dollar index movement and the US equities volatility. They are going to set the course for gold price on next trading session on Monday. That's all. We'll move on now to the numbers. On the last trading session of Friday, we have had a trading range from 1495 plus to 1515 plus. Numbers are rounded and the market is closed. Gold spot printed a close price above 1504 in the last trading session of Friday. The market is closed. Gold is trading in a bullet trend above its all daily simple moving averages except the 50 days daily simple moving average, and the momentum is still seen strengthening. And for the RSI readings, it's moderate on all the charts: 69 weekly, 68 monthly, and 51 daily. And for the supports are seen at 1500, followed by 1493, and then 1480 major support. And for the resistance, 1509, then 1513, and then 1518 major resistance. That's all for the numbers. We will move on now to the trading strategy. Finally, a piece of good news helped to stop the bloodbath from taking place in both US dollar and US equities, because the unemployment rate, according to the news, fell to multi-year low of 3.5%, which I believe strongly that it's not true and going to be revised, because simply it does not fit with other pieces related to labor market of the United States. However, we knew that equities are going to rally with this or with this data or without it, because technically we have advised even our customers to buy S&P toward 2,750 one day before the data is out. Dow Jones is done with the correction in my belief, but S&P and Nasdaq still. I see S&P hovering around 2,800, minimum 2,828, and Nasdaq 6,950 to 7,234. Gold did not rally because simply the expectations for a rate cut fell down from 92.5 to 76. That's why, but it did not also lose ground. It's still above 1,500 on the spot. From general fundamental understanding of the market, the world is not a safe place, and it's not going to be a safe place anytime soon. So you have to stay long in gold. Any risk factor which may arise in Iran or North Korea or Hong Kong, or in the trade deal between US and China, it will send gold beyond, way beyond anyone thinks, in no time. And the central banks obviously are buying the dip and protecting the 1450 for so many reasons. Also, great nations like Iran, India, Russia, China are ditching or dumping the US dollar and using their local currencies to settle down their transactions. Bottom line, buy gold and add up, and if it dips, add more, each $25. It won't tank, forget about this. It won't collapse, forget about this. And bullish pressure could go take gold right now to 1540 or even 1560. Now I've been talking about 1700, and when 1700 will come, it will come. You will need to be patient. Maybe in a month or two you will see gold arriving to 1700, because things needs to fall into place before gold reach there. That's all for today. Thank you guys for watching. I'll see you tomorrow in another video.